Welcome to the Learning Investor Podcast. Sit back, relax, and take it slow. Curious minds will always find a way to grow. So come along, let's start the show.
Welcome to the Learning Investor Podcast. I'm your host, Orion Potts. Today, I have a special guest with me, Donna Reed. How are you, Donna?
Hi, Orion. Thank you so much for the invite to the Learning Investor podcast. It's such an honor to be here.
Awesome. Thanks for hopping on. I'm excited for today. We've done some business together in the past, and I wanted everybody out there to have an understanding on what a syndication is. So today we're going to be talking about syndications, some of the language around syndications, what you need to understand. And this is probably going to be a 2-episode series. And for starters, we're going to start off with the understanding. So, Donna, can you go into what do you do?
Okay. Thank you so much again. What do? I do a lot, but what I want to say more of is I find opportunities for my investors so that they could make great returns on that investment. Not only that, I'm like, I want to make sure that they are able to have passive income. And I'm sure we'll go through more of what it is and how they obtain it. But that is one of my I pour myself into that to make sure that they understand and be able to achieve that. And that's what Reed Elite Capital does.
Awesome. I have 2 deals currently that I've worked with you on so far.
Yeah.
And they are syndications. What is a syndication, Donna?
Syndication is just having a group of people coming together and taking down a big project, a multi-million-dollar project like an apartment building. And that's the basics of it.
Awesome. Yeah. So, the most recent one was, I believe, Rise Apollo.
Mm-hmm. Yep. Yeah, that's what we did, that one in Dallas, Texas. That was really cool. Yep.
Yes.
We just closed on that a couple of weeks ago, right?
Yep. So I'm super excited for that. I know Texas is popping off right now.
Yeah, it is.
So when people get into syndications, there's going to be a lot of language that's thrown around, and I want to cover that so it just kind of unveils some of the mystery around it. So when you talk about a syndication, you have LP and you have GP. Can you explain what both of those are?
All right. So those are like the main core of it, the people that plays a role in the investment. Like a GP, general partner, is just the person that's in the company that manage the property and also put in some investment in it. Now, the limited partner, the LPs, they're the one that invests most of the money, and they sit back and earn passive income from that investment.
Gotcha. So I would be considered an LP.
Correct. Yep.
Yep. So here's my money. I don't really want to have to touch it. You can let me know how things are going.
Yeah, that's why it's so important to work with somebody that would have your back, one, but to also be able to have a good track record and also work with you on that. Mm-hmm.
Awesome. So getting into these types of investments and other types of investments, there can be some doors that you have to go through. So I wanted to talk about being an accredited investor versus a non-accredited investor. When you hear those terms, sometimes you'll want to be a part of some type of investment, and you will not have access because you are not an accredited investor. Can you explain what those are?
Correct. Right. So when it comes to the SEC and they decide that, you know what, we want to make sure we're protecting our investors. So they label them one, accredited investor and a non-accredited. Accredited investor is just someone that meets the income requirement and net worth income requirement of over 200K, with a spouse is 300K, and then the net worth is over 1 million. Now, the non-accredited investor, they don't meet that requirements, but they do have access to not that many deals, because the regulation, they want to protect them at the high risk of their investments. So that's the difference between both accredited and non-accredited.
Gotcha. Yeah, I feel like once you start getting into, having that much in assets and that much income, they're expecting you to be a little bit more savvy with your money, is what it seems like. Yeah.
Yeah. And it's mostly to protect the investor too, so that they know more than the average cat. When it comes to non-accredited investors, not that they don't know, it's just to say that, you know what, we don't want to put you at risk.
Yeah.
So therefore, we want to protect you. Exactly. Yeah. That's exactly right. Yeah. Mm-hmm.
Yeah. So let's say I work with you. I actually have worked with you. You've actually shown me a large amount of deals, and I've passed on a fairly large amount of them. And then some of the ones that I took advantage of for personal reasons are some that had multiple underwriters that were evaluating the deals. So I have in here, what is an underwriter? When I'm looking at a deal, what is an underwriter when I hear that term come up?
Okay, so the underwriter is the one that's going to analyze the numbers. They're going to analyze the property income, the expenses, and also the market condition. They basically look at the deal. What is the financial portion of it making sense? So when you think about underwriting, you want to just make sure that the deal has safely been inspected financially and the numbers that are before you are true. Sometimes you'll have the rent roll and then you'll have the expenses. But if you don't have all the expenses, you cannot make a good decision on which deal will make a profit for you. So the underwriting is very important.
Yeah. Yeah, and you said rent roll. I know I've seen that in the past in my dealings when I was looking at rental properties. Mm-hmm. The rent roll, if I'm not mistaken, is the actual rent that's getting paid versus some random number they're putting on whatever sheet you're looking at.
Right.
Yes, that could be a huge difference when you're actually looking at what's coming in. How is a typical deal structured?
Yeah, so the deal is structured in, you want to know, first of all, you want to know the roles, who's what and who's going to do what, right? First, you look at the general partner, what we just went through, who's going to manage it? Who's making the decision, right? So that's the role you want to play, a GP and a limited partner. The limited partner who's providing the most of the money and also a passive role of it. Then that's the role. You also want to look at the capital, the role, the capital. How much cash is the LP providing? How much cash is the GP providing? And what are they going to handle? Also want to take a look at the returns of preferred returns. The LP pays out first on an 8%. Maybe it's 8%, 10%, 7%. It depends on what's been allocated or what's been said that you decide to make that go. Also, you look at the returns and you look at the profit that you're going to make. The profit is normally split where the LP may make 70 and GP make 30, 100%. And then the final thing you want to look at is the exit plan. When are they looking to exit? And is it going to be sold or refinanced? And what are you going to make on there? So those are just a little bit of the example, but those are the main structure of a deal.
Gotcha. Yeah. So the ones that I looked at and then decided to go for, I believe it was like a 3 to 5 year exit on mine.
Correct.
And then I think it was a 70-30 or an 80-20 on some of it. Yeah.
No.
I think it's a 70-30.
80-20.
Is it 80-20?
No, yours is about 80-20.
Okay,
yeah.
Yeah. Yep.
Yours is 80-20. Yep. Mm-hmm.
Yeah, absolutely. So jumping in for for people that are looking to go into these types of investments in syndications, these large deals where you have groups of people pulling together their money to do a large project. I know the ones that I'm involved in, they're doing upgrades on a couple hundred doors, right? They're putting washers into apartments. They're redoing kitchens, all to be able to put more value in the asset so they can raise the rents and make more profit off of it, and also provide better homes, better apartments for people to live in the area. So if I'm a person that wants to get into syndications, what's the minimums before I can invest in something like this? Every type of investment will typically have some sort of bar I have to meet in terms of how much money I need to put in at a minimum. What's the minimums that you have seen in this types of investing?
Normally, the minimum is $50,000 that you put in, right? But it depends on the return that you're looking for. And you said, you know what? I think I could put in a little bit more, like 100, and then the favorable thing that happens in the end is that the returns become different for 50 instead of 100. But the minimum is normally 50,000 to put in on deals like this.
Gotcha. So when you put in more, are you getting a higher rate of return, or are you just getting your return before others? How does that work?
No, when you put in more, you're getting a little bit more on the return on the investment that you put in.
Gotcha. Okay. So the more you have, the more you earn.
Yeah, exactly right.
But
exactly
some
right.
of the earlier conversations we had, made a lot of sense in a way. This particular part of my portfolio, I plan to what I would call snowball, right? If when one of these exit successfully, because they're going to be successful, when they exit successfully, the returns on that project, I am going to roll into another similar type project.
Right.
And keep things moving on down the road. So what are some of the pros? We'll start off with the pros. Let's start off with the cons, Donna. Let's start off with the cons, and we'll end on pros.
Okay, let's do con and then do the pros at the end. Okay,
Yes.
No problem.
So what are some of the cons?
So getting into multifamily is a risky business, but if you're guided right, education and all of that, you are able to overcome and get to what you're looking for. But some of the cons that you may find is management, right? You want to make sure that you have a responsible property manager, because this is a big project. You're not going to be able to be there all the time. So if you have more units, you got more tenants. And when the tenants leave, you have to have a property manager that is able to get occupancy up so that you could still make a good investment. Also want to look at your upfront capital that you're putting in, right? It requires significant investment, but you want to make sure what you put it in is what you're going to get. I'm not going to say that it's going to be all gung roses. It depends. What happened was the interest rate went up, and a lot of people went through difficulty through that time. But I know with my investors, what we did, we put things in place that would not happen. We put things in reserve and things like that. Another thing, you also look at the debt. The loan that is on the property, is it flowing? Just like I said before, with all the interest rate went up, and a couple of years ago, a lot of the the buildings had to be restructured. The loans had to be restructured. So those are some of the things when it comes to the cons in multifamily: the management, the upfront capital, and the debt service that you have to look at.
Right, and all of those things can cause risk, essentially, with the project, right?
Absolutely,
yep.
absolutely. So let's look at the pros right now. We look at the cons, let's look at the pros.
Yes.
And you may say that it outweighs, but it does outweigh. Every investment at one point is risky, but you have to make sure you know which risk is good for you. Now, when it comes to saying, I want to build passive income, that's where your cash flow comes in. And you're saying, okay, once I pay off the income, once I know the income, the expenses are covered, what is left is your passive income, the cash flow that you make at the end. It may be little, but after a while it builds up, and then you're able to suffice that. You also want to look at, instead of you having one single family, you have a multi-family. A single family, if one person leaves, the renter or the tenant leaves, you're done. You can't get any more income from that. But if it's a multi-family, if 3 leaves, you still have 30 units still to get an income from. And the appreciation over a period of time, it increased over the value of your property. And what high income earners love is the tax benefits that you get on that as well. The depreciation, the interest deduction, and also you could use a 1031 exchange. Just like you were talking about, Orion, is that you may use that. We sold one property, but after you sell the property, you could put it into a same-like asset in order to balance out your tax benefits, give you tax benefits. And one of the other things that I just want to add in is the inflation edge. We know that rent often raises with inflation, so that protects your income in comparison to other assets that are out there. So those are some of the things that will say that it's a pro or it's good to invest in multifamily, the cash flow, how you could scale up from single family to multifamily, and also the appreciation over time, the equity value in that, and the tax benefit and the inflation edge against that. So yeah, it is risky, but if you look at the pros, it really outweighs them.
Yeah, especially that 1031. If it's I will do a whole separate episode on 1031 exchanges. But what that is you are delaying the tax man on capital gains by moving that profit that you made on the investment into a like investment that is equal or cost or more within 180 days. You have to choose some and then move your money over. So lots of different things that you can do with this type of investment. Something that you brought up that is exciting for me is, yes, there is some risk, right, with real estate, with interest rates and who's managing the project, and if something catches on fire or whatever, right? But especially with the rents, I mean, when you're talking about a single family and then they move out and then now you have no income coming from that piece of property and you have to go find somebody else, then you've got a spread in multifamily. Well, I think the one we did is over 200 doors, I'm pretty sure. That's a pretty big spread. I mean, the last occupancy report that I saw, we were in the 90s. It was either 80s or 90s. 90, yeah. Mm-hmm. So, I mean, you're spreading that across all of the apartments in that investment. So it's that does help limit some of the risk. And then on exit, that is some of the exciting piece, which I hope comes to fruition here in the next few years on one I did about a year ago. I think it was a year or two ago.
April will be a year.
Yes, exactly. So when that as exits, we're going to get a piece of the pie during that sale. There's multiple ways in this type of investment, the way the deals are structured, the ones that I am in right now, I'm getting cash flow. Like Donna said, I'm getting money coming in. I'm getting that money every single month. And then when they sell the property, I'm going to get some amount of some sum when it gets sold. And then at that point, I've got a bunch of options to choose from with what I want to do with that money. I could pay the tax man and take my cash and move it into some other type of investment. I could do a 1031 exchange and delay the tax man and roll it into another property and let it make some gains over there without having to pay long-term or short-term capital gains on it. So lots of directions I can go with these types of investments. Okay,
correct.
So hopefully that gives you a better understanding of some of the lingo. The next episode is going to be, for those that are interested, how to get started. We're going to be talking about how do you get started in detail, how to get connected with people that like Donna, reviewing deal information. You'll have decks put in front of you with deal information that helps you evaluate, like how do you analyze those and the returns, advice and where your current finances need to be, transferring funds, receiving updates on how a deal's going. Like earlier I mentioned that I get a report on how my investment's doing, how to read through that and what things mean, and then what a K1 is. So that'll be the next episode. But before we sign off, Donna, for those that are interested, how do people get a hold of you if they have more questions or they're interested in looking into investing with you?
Oh, that would be awesome. And I love talking about real estate, one of my passions. They could automatically get to me through IG and all my other social media handles. It's Donna Sells New York, NY, Donna Sells NY. Or they could look me up more so. I go into details about multifamily investing and also what do you need to do on my LinkedIn page. They could look me up as Donna M. Reed, or they could look up Reed Elite Capital. But most of all, if you subscribe to my newsletter, you get tons of information that you could print out and you can keep with yourself. So if you subscribe and you go to my website, Reed Elite Capital, you definitely would get tons of information that would walk you through with that. But yeah, just reach out to me whichever way. I would love to help you. And most of all, love to chat about real estate. Thanks you so much, Orion, for this time.
Absolutely. So for Reed Elite Capital, that's ReidEliteCapital.com. And as far as the newsletter, I would recommend signing up for it. When I met Donna, she was receiving an award. And I met her in Vegas, and I started poking her brain about real estate, and she was more than happy to share a bunch of information. I signed up for her newsletter. The newsletter isn't just ads. It's actually, there's a lot of informational things to teach you about what's going on, or different types of investments, things like that. So it's great. Sign up if you want to increase your investment game.
Absolutely.
Yep. Well, thank you for taking the time to jump on, Donna. It was great talking with you, and I look forward to episode 2.
Yeah, me too. I'm all excited about that. We could go in deep details.
Yes. All
See
right,
you
everyone.
then.
See you on the next one.
Thanks for listening to the Learning Investor Podcast. One step smarter, one thought better. We'll be back soon, you already know. Until next time, that's the show.